There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Good afternoon, everybody. This is Mark. We're back here for the daily recap. It is Tuesday. So after yesterday's sell-off, which was a big sell-off, and obviously it was exacerbated by the tragedy at the Boston Marathon, and our hearts certainly go out to everybody in the city and those that are affected. It's terrible. But it exacerbated this move. I'm very surprised to see what we did today. It's really what we've been doing all year, but I was very surprised because it seems like, the transports were starting to break down. You had the IWM breaking down. You had some of the spiders breaking down. You certainly had lots of stocks, certainly gold and some other commodities breaking down. And the charts were not really are not really looking as good or as pretty as they were before. And then we have a day which we recover, 60%, 65% of what we lost yesterday. Maybe a little less than that, but definitely more than half of what we lost yesterday. That's a pretty good sign. We're not out of the woods yet, certainly, and the sell-in may go away, could still be in effect. Charts need some more time to repair themselves in certain industry groups, and then there's other industry groups that, quite frankly, the charts, to me, look like there was a little damage done and look like they're ready to go higher. Banks, hit or miss. Citigroup came out 2 days ago. Decent earnings. It's recovering nicely. It looks like it's going to be touching highs. Goldman Sachs came out this morning. Did some damage. Buyable, I guess. We'll see. It's still trading below some key moving averages. We'll have to wait and see. I think it needs more time. BAC tomorrow morning. JP Morgan, Wells Fargo already came out. They're hovering, not doing a whole lot. It seems like they're just digesting. Doesn't seem like they really want to crack down. And again, you don't want to see leadership cracking down across the board. I get nervous. The transports really have been breaking down and really possibly almost breaking a much longer trend line going back to November. Seems like they recovered a little bit today. They're still below, some key moving averages. Still above some key moving averages, which is the 200. Still not out of the woods yet. We'll have to wait and see if they regain some composure to show some leadership back in this tape. Not sure yet. Seems like it changes from a day-to-day point of view, but from a perspective of what's strong, where the money's going, it's rotating consistently. One of the biggest sectors that we've been talking about consistently now for months is the biotechs. Amgen. I'll just plug up these stocks so you can see it. I mean, I actually was short Amgen, a little Celgene today, a little RAGN. I thought they were just due. One red day, you figure maybe you get another follow-through after a weekday. Did not happen. Amgen, Celgene, RAGN. Very impressive moves. They look like they're going higher. They're best-in-breed stocks, best-in-breed charts. So certainly the biotechs, you got to keep them on the radar across the board. They look really, really good. Money's definitely getting put into those, that sector. Certainly those are some of the leading GILD, leading stocks in those sectors. High beta woke up a little bit. You have LinkedIn getting back to its high-level base. Maybe it waits to earnings to really makes that 200 range. Netflix, same type of trade. Obviously, it's going to move $5, $6 in a day, but comes back. Very little damage done the last few days, if any. Google, recovering nicely. Earnings are out on Thursday, so it might just digest and wait till earnings, tag the 800 and then just sit. We'll have to wait and see. I don't think people are going to be, positioning hugely before earnings. I could be wrong. Technically, it's looking okay, and even technically on the hourly, it's looking even better. Just so you can see, that's not really giving me what I wanted, but it looks pretty good. It looks good, and to me, overall, it looks like if earnings are good, certainly it's going to touch, all-time highs. But we'll have to wait and see. Earnings are going to be the determining factor. Amazon, same type of stock, looks good, recovered. It almost looks like there's no damage done in this tape. Quite frankly, after today, there wasn't a whole lot of damage done across the board. Commodity stocks, Gold gapped up, rolled over, nice textbook type trade for those that were involved. Gap up and really rolled over the consistently majority of the day. Didn't quite go negative, but again, enough that it's a bearish pattern that a lot of damage is done, and any rally at some point in strategic levels is going to be shortable for the time being. We'll have to wait and see how long that lasts. Gold and silver, same type of trades. Oil, commodities, not really much to talk about. They did some damage yesterday. The OIHT ETF, it did trade over its 200-day this morning, or close above there, but I still think more work is done. Not the most exciting sector to really maneuver, but it's something that has to be watched. It's not a leading sector at any point at this point. Home builders, not great. You would think they would be a little higher based on being a leading sector, but the Tolls, the Rylands, the Lens, PHMs, they've all sold off pretty nicely, and I do believe, with the housing sector has recovered and is recovering, I do believe at some point there's going to be a nice buyable opportunity. They are a difficult sector to trade from a day-to-day point of view, but you got to trust your levels and let the market sort of dictate what to do and where to trade. Another stock I've been on the radar that I've been watching, I actually took advantage of today a little bit, FSLR. I think it's beginning. One of the better looking bull flags that I see out there, obviously against 35, that's the number I've been talking about. I'd like to see that momentum push through the 40, heavily shorted. You just have to wait and see. Be patient is the only way to really make money in this trade. But you can see the key moving average, the 8-day moving average is starting to play catch up. That's a good sign. The fact that it's been hanging above there consistently for at least 5 to 6 days after last week's move. So something that has to be on the radar and should be watched. A few other sectors I'm starting to watch. I just took a tier in Humana this morning, filled the gap, or this afternoon filled the gap. Possibly can regain some composure, maybe move back to 79.80 after 2 weeks of downward action. After that healthcare news, we'll have to wait and see. Some of the others are actually acting better. Aetna's acting a little better right at highs. WellPoint, I believe, looks pretty good too. Bounced off some key moving averages. So it's a sector that has to be watched. You can spread yourself out. You could try to be a little bit, thin. It's just a matter of what you want to do and where you want to be. Individual sectors, individual plays, they are working. You got to do your homework. UNXL, I know it was mentioned in the chat a few times. We were talking about around $28 to $29 in that range, and obviously today hit 37. Very good move, very impressive. Strong stock, and these are stocks we're finding on the VTF, we're finding and we're talking about and following through. I personally sold it yesterday. It hurts a little bit, but it's part of the game. It's part of what happens. It's part of how this market is trading. It's definitely making it difficult to stick with your positions. Every time we have this big down move, I got to tell you, people want to be out and think the reversal and the pullback is starting to happen, and then a day later we come right back. So I think you got to put the game plan is continually stick with the fact that we have not had a 3-day, 4-day sell-off. I don't think we've had a 2-day sell-off. It's a 2 or 3 day sell-off all year, and as long as that continues, I think every severe pullback is buyable until it's not. And ideally, you make enough money in the process that it's telling you that's the case. More work has to be done on some of the charts that I've mentioned, because I don't think, even if we see leadership, I think it's a little bit more back and forth, and some damage was done, yesterday. Certain gold, silver, and some of the other commodities need a lot more time, and quite frankly, they're probably shortable on bounces versus being buyable. But then you have, the other parts of the sectors, the biotechs, the high beta, banks, certain banks. That quite frankly look very good and are tradable from the long side. Earnings are coming out. We have a bunch of earnings. We had some earnings at the close. We had Yahoo and Intel. Intel, when last I checked, was up a little bit. Yahoo was down a chunk, a few percentage points. We'll have to see if that's going to be viable. Obviously, Yahoo has looked good anyway, so we'll have to see what happens, pre-market tomorrow morning to see if it's going to be viable. See if it touches the 50-day, which is a possibility. And if it does, that's probably going to be a viable opportunity for us. I don't know if it's going to get that low, and it could be obviously higher as I'm speaking to you. But earnings are out. The cream will continue to rise to the top, and again, others will fall by the wayside. You're going to get lots of action. You're going to get lots of volume attached to some of this action, and that's going to make for some good trading for us. You just got to have a good head on your shoulders, do your homework, be patient, ideally try to get some conviction along with the ideas you're playing. Hopefully you had a good day today, and certainly we'll be here the rest of the week for play-by-play. I'll see you tomorrow. I'm Marc Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.